Well, Pallinghurst Resources is a private equity company focused on underperforming assets and businesses in the mining sector. It was founded by former BHP Billiton CEO Brian Gilbertson and listed on the JSE in August 2008. Pallinghurst has a market cap of 1.7 billion rand, but pays no dividends and makes no profits. So a company that pays no dividends, pays no profits, would you want to be in this one at all?
It's unfortunate because Brian was the CEO of BHP Billiton, very highly regarded South African mining chief. He and Arne Fransen, who was an associate of his who'd worked in the platinum industry, founded this thing in late 2008. Which was just about exactly when the wheels came off the global economy. But they raised quite a lot of money. They were traded at around 10 Rand a share. You had to be a special customer of Investex to get any of the shares in this thing. Since then, it's gone downhill, like driving in an incline shaft in a mining property. So not good at all. The Fabergé business is in there as well. That's the famous Russian eggs, and they put a luxury goods business together, and they've opened a store on Madison Avenue in New York City and so on and so forth. But the platinum bits and pieces, the iron ore and manganese stuff, they've battled, and it's because the market environment with regard to sort of junior mining companies has not been good. And then again, this thing is riven with a conflict of interest issues in terms of them having stakes which they put into the entity, them having a carried interest in some of the stakes that get bought, and then a management fee of 1.5% and a benchmark and a big solid 20% of profits above an 8% hurdle rate. Again, sort of a listed hedge fund in the mining area hasn't done well for obvious reasons.
So playing in a sector that's under pressure right now, would you be getting into Pallinghurst Resources?
We actually like Pallinghurst. We don't trade it to liquidity reasons, but I think it is an eclectic mix of businesses, but actually some of them do fit together, like the coloured gemstone business, Gemfields, does fit in quite well with the Fabergé business, which has been run by one of the sons of Alfred Dunhill, etc. So it does have that sort of lineage. I mean, we really do like Brian Gilbertson as well. We do rate him as one of the best management, if not one of the best managers globally of a mining company. At this point in time, if you take a look, it generates a lot of free cash, although it doesn't pay dividends. It's got roughly $40 million of cash on its balance sheet. It's got a 350 million rand, and its market cap is 1.7 billion. So you've got 20% of the value of the business in cash, and it seems to be trading at close to a 60% discount to its underlying NAV, which obviously the outlook for platinum and iron ore and some of the steel businesses is very bad. From our point of view, I think if you have to take a slightly longer term view, I think wherever Brian Gilbertson has landed up, he's tended to make a lot of money for himself and for shareholders. And I think on a longer term picture, he will execute the projects he has promised. So we do like the story.
So it's best to get in now and wait.
There's no rush. I don't think there's any rush to get in, and I think if you want liquidity, it's definitely not a place to be. But if you like Christo, which through his Titan Financial Services has also taken a big stake in this, and you have a 5 to 10 year view, I think you're very safe.
So hot or not for you?
Hot on a long-term view.
Paul, hot or not?
Now, they did a rights issue not so long ago at 223, which is currently where it's at. So, you might argue it's bottomed, but, in the resources environment, I think there's plenty of money to be made by the global leaders in that place if you are anticipating better than expected Chinese growth and a recovery in the sort of commodity cycle. I'd rather be in the dividend-paying established operators who've got first-tier global assets. So for me, this one not hot.